Welcome to the Finance Finder podcast, where we explore all things money management, investing, and personal finance to help you achieve your financial goals. We have some significant updates from the Asia-Pacific Economic Cooperation, APEC. Recent reports indicate a potential slowdown in APEC's growth due to persistent inflation and growing tensions between the United States and China. In line with these economic challenges, APEC finance ministers are convening in San Francisco for a week-long summit. Notably, they are addressing the increasingly important issue of cryptocurrency, signifying their acknowledgement of the rising significance of digital currencies and blockchain technology in the global economy. Moreover, APEC finance chiefs have come to a consensus to prioritize sustainable economic growth. They recognize the importance of balancing economic development with environmental and social factors, thereby committing to strategies that foster growth while also emphasizing sustainability. This approach demarcates APEC's dedication towards addressing prevalent economic issues, while promoting comprehensive and sustainable growth in the Asia-Pacific region. Stay tuned for more updates on this impactful gathering. We'll keep you posted on APEC news. In recent BlackRock updates, the market was stirred by a false filing for a BlackRock fund based on the XRP cryptocurrency. This occurrence prompted a quick market surge, followed by a notable drop once the filing was exposed as fraudulent. This serves as a clear reminder of the critical need for information verification prior to making investment decisions. In cryptocurrency news, BlackRock has articulated its reasoning for the Securities and Exchange Commission, SEC, to sanction spot Ethereum exchange-traded funds, ETFs. The investment management titan asserts that this approval is vital for the augmentation and acceptance of the cryptocurrency market. Further highlighting their increasing interest in the sector, BlackRock plans to launch an Ethereum ETF, signaling a growing trend among financial institutions towards cryptocurrency-backed ETFs. However, they've categorically refuted rumors of filing for an XRP ETF, clarifying there's been no such action. BlackRock is also calling on the SEC to equalize the playing field by treating spot market crypto ETFs the same as futures ETFs. They posit that current regulatory distinctions are baseless, and parity in treatment would elicit greater market clarity and consistency. In real estate news, an absorbing article explores BlackRock's impact on the housing market. The firm's vested interests and sway in the real estate industry have sparked discourse over potential implications on housing affordability and market stability. Stay tuned for the latest BlackRock news and updates in the dynamic world of finance and investment. Cboe Digital, the US-based options exchange, is making a groundbreaking entry into the world of cryptocurrency trading with an exciting announcement. The firm is set to launch leveraged Bitcoin futures trading and introducing margin futures trading for both Bitcoin and Ethereum. This pioneering move will establish Cboe Digital as the first regulated cryptocurrency exchange in the United States to provide spot and leveraged derivatives trading all on a single platform. This significant development is slated for January 11, 2024, marking a major milestone in U.S. cryptocurrency trading. The venture will provide investors and traders with regulated and secure avenues for trading Bitcoin and Ethereum futures. Leveraged futures trading will offer enhanced flexibility and potential for higher returns to those engaged in trading these digital assets. Meanwhile, the introduction of margin trading will afford traders the opportunity to amplify their positions and potentially capitalize on market movements. Stay tuned for more updates on this instrumental move by Cboe Digital, as we continue to deliver the latest news and developments from the vibrant world of cryptocurrency. Citigroup CEO Jane Fraser, who took the helm earlier this year, has been at the forefront of headlines, making an impact with her leadership and commitment to the bank's substantial restructure. Her determination to reorient Citigroup towards sustainable profitability and growth centers around key values such as empowering employees and embracing diversity, identifying these as critical success factors in the banking sector. Her leadership ethos works in tandem with Citigroup's ongoing operational transformation. Expected to divest some of its international consumer banking operations, Citigroup is shifting its focus on catering to its wealthier clients. This strategic adjustment, designed to enhance efficiency and profitability, exemplifies Citigroup's adaptability in line with fluctuating market scenarios and customer needs. However, not all recent undertakings by Citigroup have proven fruitful. Its initiative to transition customers to digital-only communication was met with backlash. By imposing penalties on customers favoring paper statements, Citigroup overlooked the significance of aligning incentives to accelerate the digital banking transition. This misjudgment underscores the necessity of customer centricity, prioritizing value and convenience over imposing measures. As Citigroup continues to navigate its transformation process, the outcomes of strategic rectifications and the capitalization of existing strengths remain to be seen. With Fraser's leadership focused on sustainable growth and fostering an inclusive banking environment, this vision will undoubtedly carve the bank's way forward. Stay connected for further updates on Citigroup's evolution within the dynamic banking industry landscape. In HSBC news, there are several noteworthy developments within the financial industry. Firstly, UBS, a prominent banking institution, is breaking ground by allowing its wealthy clients in Hong Kong to trade crypto exchange-traded funds, reflecting a growing acknowledgement and acceptance of cryptocurrencies in the financial sector. Turning to global currency affairs, the US dollar is displaying resilience, firming ahead of the forthcoming US inflation data release, and thereby garnering investors' attention to assess its potential impact on the Federal Reserve's monetary policy. In contrast, the Japanese yen seems to be under pressure, lingering near a one-year low, an indication of its relative weakness. HSBC has been making advances of its own, particularly in the gold market. The bank has executed the first tokenized physical gold trades using distributed ledger technology, DLT, which demonstrates HSBC's dedication to technological evolution and sheds light on the possible benefits of blockchain in handling intricate transactions. In other HSBC news, the bank has opted to divest its retail and wealth businesses in Mauritius to ABSA. This strategic decision is in line with HSBC's restructuring efforts to concentrate on its central enterprises. The deal with ABSA, a reputable African financial group, emphasizes HSBC's commitment to a seamless transition for its customers and the sustained expansion of Mauritius' financial sector. That concludes today's financial news. Please stay tuned for further updates on these stories as well as other important events shaping the world of finance. In the latest ICBC news, the Industrial and Commercial Bank of China, ICBC, is addressing a recent cyber attack which disrupted trades in the US Treasury market. As a result, Wall Street and Beijing are now mitigating the impact. It's alleged that a ransom was paid to the cybercriminal group, Lockbit, to restore operations. The attack, which particularly targeted ICBC's US arm, has prompted significant worry and an urgent response from financial institutions and governments. Following the compromise of their systems, ICBC's New York division has proposed the use of a USB stick as an alternative data transmission method. This incident in China's largest bank is being closely monitored and solution-focused measures are being taken to ensure the security and stability of the financial sector. Further details of the attack, its implications, and response actions will continue to be shared on ICBC News. In recent iShares news, notable companies and advisors have made interesting changes to their stakes and holdings in certain ETFs. Coom LLC, a well-known investment firm, significantly decreased its stake in the iShares Core Growth Allocation ETF by a notable 49.9% during Q2 2021, suggesting a major adjustment in their investment strategy surrounding this ETF. Similarly, Texas Capital Bancshares Incorporated, a prominent financial institution, has reduced its stake in the iShares MSCI ETH ETF, indicating a potential reassessment of their position in this ETF. However, the extent of the reduction is currently unknown. Furthermore, Alisco Advisors LLC, a prestigious advisory firm, reduced its holdings in the iShares Core MSCI ETH ETF, identified as BATS-IFA, in Q2. The exact magnitude of the reduction remains undisclosed, but it is clear that Alisco Advisors LLC is actively modifying their investment portfolio. These noteworthy developments in the iShares ETF's landscape highlight strategic adjustments being made by various entities in their holdings and stakes. Rest assured, we will keep monitoring these trends and provide regular updates on the latest iShares news in this ever-evolving ecosystem. In recent JPMorgan news, the bank has issued an advisory on US crypto regulations and the current rally in the crypto market. Despite recent losses for the Securities and Exchange Commission, SEC, JPMorgan warns that the expectation of eased regulations may be unrealistic, disappointing those hoping for a friendlier crypto regulatory environment. The financial institution also casts a skeptical eye on the recent uptick in the crypto market, attributed to potential approval of Bitcoin spot exchange-traded funds, ETFs. JPMorgan warns that the enthusiasm surrounding these developments may be overdone, expressing reservations on the approval and long-term viability of spot Bitcoin ETFs. As such, JPMorgan's insights suggest a cautious approach towards the cryptocurrency market, acknowledging the existing risks and uncertainties in this unpredictable industry. As the situation continues to evolve, we will keep monitoring and providing updates on developments in this sphere. We have some significant updates in bybit news to share with you, relating to both legal matters and expansion incentives. Bybit is currently embroiled in a massive lawsuit filed in an attempt to retrieve an alleged fraudulent amount of $935 million that was transferred to Bybit's investment arm and other entities prior to FTX's bankruptcy filing. This lawsuit has been filed by the bankruptcy managers of FTX to seek financial restitution from both Bybit and Mirana Corp, as part of an effort to manage the financial ramifications left by FTX's bankruptcy situation. This legal action is intended to hold these parties accountable for any alleged misconduct and reclaim the involved funds. In light of Binance Crypto Card halting its operations in the European Union, Bybit Card is stepping in to fill this vacancy and provide an alternative for crypto enthusiasts. To attract new users and encourage them to explore the features and benefits of Bybit Card, an enticing new user bonus has been introduced. These varied developments underscore the ongoing legal and competitive dynamics involving Bybit in the cryptocurrency industry. Stay tuned for further news and updates on these unfolding matters. In recent Janet Yellen news, she has expressed her disagreement with Moody's negative outlook on the U.S. credit rating, instead expressing confidence in the strength of the American economy and treasuries. Also, in a significant development concerning the global financial landscape, finance ministers from the Asia-Pacific Economic Cooperation, APEC, member nations are expected to convene in San Francisco. The meeting is intended to deliberate on the expanding role and potential impacts of cryptocurrencies in the global economy, and to discuss necessary regulatory measures. This assembly signifies the increasing acknowledgement of the importance of cryptocurrencies and recognizes the need for international collaboration in this sector. The potential insights from this meeting may well determine future approaches of governments and financial institutions towards regulating digital currencies. Stay with us for more updates about Janet Yellen's perspective on the U.S. credit rating and the potential outcomes of the APEC finance ministers' discussion on cryptocurrencies. In the latest news from Moody's, it's quite a juxtaposition between market movement and credit rating downgrades. Despite Moody's recent demotion of the U.S. government's credit rating outlook to negative, an unexpected response has emerged with stocks seeing an upward push and the bond market demonstrating stability. The primary driver behind this surprising trend is the optimistic view presented by the Federal Reserve. Investors appear to be weighing in the Federal Reserve's perspective with higher importance than Moody's downgrade, shaping the current market trends. Zooming into the details, U.S. stocks have garnered gains, resisting Moody's negative outlook. Still, it's crucial to acknowledge that this positive market performance might be transitory, with concerns about the national debt still casting a shadow. Simultaneously, the bond market maintains its tranquility, exhibiting no significant effects from Moody's downgrade. This muted reaction is likely a result of the Federal Reserve's sanguine outlook surpassing the influence of the altered credit rating. In summary, despite Moody's downgrade of the U.S. government's credit rating outlook, both the stock and bond markets show robustness. The focus of investors seems to have shifted more towards the Federal Reserve's upbeat outlook rather than Moody's credit rating downgrade. However, it's vital to keep track of any long-term consequences of these events given the rising national debt. In the latest SEC news, an update has been shared on the highly anticipated spot Bitcoin ETF applications, with the Securities and Exchange Commission setting a deadline of November 17 to either approve or reject all 12 pending applications. Despite some investor anticipation, approval does not mean immediate market availability. Even though the approval of these applications marks a significant stride in the cryptocurrency market, a delay should be expected before these Bitcoin ETFs actually become accessible, with estimates suggesting it could take at least a month from approval to investable availability. Hence, while keeping hope alive, investors are advised to remain patient. Zelle, the prominent payment app, has recently announced an important policy update concerning imposter scams and customer refunds due to escalating pressure from Washington lawmakers. The policy, aiming to mitigate financial impact, assures that refunds will be provided to customers who have fallen prey to such scams. Imposter scams, instances wherein fraudsters represent themselves as legitimate entities to trick victims into surrendering their money, pose an increasingly prevalent threat in the digital realm. As a proactive measure, Zelle decided to revise its policy to prioritize customer safety. This action illustrates the escalating urgency to address the potential risks associated with mobile payment apps, especially as cashless transactions become more commonplace. The launch of Zelle's refund policy is undeniably a progressive step, although users are advised to maintain vigilance and exercise careful judgment when making online financial transactions. Staying well informed about common scams and following secure practices can significantly help customers fortify their defenses against potential fraud. As the digital landscape continues to evolve, companies like Zelle adapting their strategies to defend their customers is a promising trend. Through ongoing partnerships between industry frontrunners and policymakers, safer and more secure online payment environments seem inevitably within reach. Keep up with Zelle for more updates, along with the most recent news in finance and technology. Thank you for joining us today as we delved into the fascinating world of finance, uncovering key insights and providing practical advice to help you navigate the ever-changing landscape of personal and global economic matters.